All right, so let's talk about something that really hits close to home for, well, pretty much all of us. Who is actually buying up all the houses in America? In this explainer, we're going to dig in and find out. I mean, you've probably heard the stories, right? Maybe you've even seen it happening in your own neighborhood. These faceless Wall Street firms with, just endless cash, buying up entire blocks. It's a pretty compelling narrative for sure. But is it the whole story? Let's see what the data actually says.
Okay, so let's just get this out of the way right up front. The common perception is that these giant, faceless Wall Street firms are buying up everything. But the reality? Well, it's actually way more local than you might think. It turns out most of the homes owned by corporations are really owned by smaller, local, mom-and-pop type investors. So how do we know all this? Well, we're going to be diving deep into a really big study from the Lincoln Institute of Land Policy. And these guys did the heavy lifting. They sifted through data from almost 500 urban counties to give us a really clear national picture of what's going on.
So what's the headline number, the big takeaway? Across all of those urban areas they looked at, just about 9% of all homes are owned by corporations.
Now, let's put that 9% into perspective. It might not sound like a huge number, but it works out to roughly 1 in every 11 homes. That's a pretty significant slice of the pie, right? But it also means, hey, the vast majority of homes are still not corporate-owned.
Okay, but here's a really, really important detail. That word corporate, it can be kind of misleading. Our minds immediately go to these massive national companies, right? But a corporate owner could just be an LLC set up by a local family business that owns a couple of rental properties, and as you'll see, the data really backs this up. Just take a look at this breakdown. It's pretty clear. Only about 2.4% of all homes are owned by companies from out of state. What does that mean? It means the huge majority of these corporate landlords are actually local investors, people operating right there in their own communities.
But, that national average, it really doesn't tell the whole story. Because in real estate, what's the number one rule? Location, location, location. And when we start to zoom in on specific cities, oh boy, the picture changes, and it changes dramatically.
So check this out. In places like St. Louis, Baltimore, and Miami, corporate ownership just shoots up to around 20%. And then there's Manhattan. It's a total outlier. We're talking over half of all residential properties are owned by corporations. Wow. But what's really interesting is that even there, the study says it's mostly in-state investors driving that trend. Okay, so if the local guys are dominant in places like Manhattan, where are the out-of-state buyers putting their money? Well, there is a super clear pattern here. They are flocking to the booming Sun Belt. Think about those fast-growing cities like Atlanta, Indianapolis, and Charlotte, places where the population is exploding and the demand for housing is just through the roof. And Charlotte, North Carolina is the perfect example. The level of out-of-state corporate ownership there is almost 7%. To put that in perspective, that's nearly 3 times the national average. That is a huge, huge concentration of outside money pouring into just one market.
So we've talked a lot about the mom-and-pop investors, and they're definitely a huge part of the story. But there's a new character that's entered the scene, a much, much larger player, the mega investor. And this timeline here, it just shows what a fundamental shift this has been. I mean, think about this. Before 2011, it was basically unheard of for one company to own more than 1,000 single-family homes. It just didn't happen. Fast forward to today, and just 32 of these institutional investors collectively own almost 500,000 homes. That's a complete game changer.
And trying to track this trend, it's really, really tricky. Why? Because they use these incredibly complex corporate structures. You can have one single large parent corporation that owns thousands of properties, but it's all hidden behind this web of hundreds of different little LLCs. It makes it almost impossible to figure out who really owns what. So who are the big dogs in this space? Well, the top 5 mega investors alone hold nearly 300,000 homes combined. Yeah, we're talking about huge publicly traded companies like Invitation Homes and American Homes for Rent. And where are their portfolios? You guessed it, heavily concentrated in those Sun Belt hotspots we were just talking about. Okay, so as you can imagine, this whole trend of massive, large-scale investment, it hasn't exactly gone unnoticed. As these mega investors grab a bigger and bigger foothold in the market, cities and states are starting to respond. And that response is basically happening along 2 main paths. You've got the top-down approach.
That's legislation and regulation from the government. And then you have the bottom-up approach. We're talking about buybacks and initiatives coming directly from the communities themselves.
So on that first path, the legislative one, you've got states like New York, California, and Texas looking into bills that would actually cap how many homes one company can own. And then, on a more local level, cities like Baltimore and St. Louis are trying to get more transparency by beefing up their rental registries and getting tougher on code enforcement.
And then there's that second path, the community one, where people are getting really creative. Take the Twin Cities, for example. A group of nonprofits actually banded together and bought 345 homes back from a big investment fund. That's amazing. In other places, like Atlanta and Chicago, they've passed right of first refusal laws, which basically give tenants the first crack at buying their home if the landlord decides to sell.
So when you pull it all together, what does it all mean? Well, the data shows us it's not some simple story of a Wall Street takeover. It's way more complex than that. It's a mix of local mom-and-pop investors, big out-of-state money targeting specific areas, and this whole new class of mega investors. And as all this money keeps pouring into housing, it leaves us with a really big fundamental question. Who gets to decide what our neighborhoods actually look like in the future?